broker-dealer is a firm like Fidelity or Ameriprise or A.G. Edwards or Merrill Lynch or Smith Barney, and they exist there because they're for Main Street America. It's easy for them to identify and say, okay, this is a place for me to go and get some investment products. Now, heretofore, they were allowed to say that they would give you investment advice. Now, and that was called the Merrill Lynch rule. They were given a free ride. Now that's been rescinded by the SEC. And in the new financial reform law that just passed, they're really taking this under review, and there's going to be some pretty stiff fines for those brokers out there who get paid and have a financial interest in what they sell you, as they're compensated by commissions on products. They look like an advisor. They even give you the impression that they are advisors, but they're prohibited in giving you financial advice unless they are investment advisor representatives and are registered that way as part of a registered investment advisory firm. These broker-dealers are hesitant to change over from being a broker-dealer. By the way, a broker-dealer means I buy Microsoft at $22 a share, I mark it up and sell it to your customers for $25 a share. That's what a dealer does. A broker takes the 25 and says, you're going to buy 100 shares, here's the brokerage fee, it's a transaction fee. You're going to sell 100 shares of General Motors, well, here's the fee. So they have a financial interest in the way that they do business and what they recommend. So therefore, it isn't impartial. And that's kind of what the problem is and what the SEC and Congress has recognized. Here's a famous quote: "The broker is not your friend. He's more like a doctor who charges patients on how often they change medicines. He gets paid for more for the stuff the drug companies are selling than the stuff that will make you better." Well, that was none other than Warren Buffett that said this. He knows a little bit about investing, and it's important for you to realize how your advisor is paid. Is it really impartial? Now, by contrast, the registered investment advisor, which is where my business resides, is regulated by the SEC or the state regulator. As I said, Secretary of State Galvin in this state. We are legally fiduciaries, meaning we have to elevate our level of responsibility to our clients above just suitability. We have to elevate it to the level of we have to think of our clients first. Now, you may say, well, how does Bernie Madoff get away with what he gets away with? And the answer is he was not registered as an advisor. That's the problem. And if somebody had asked, are you an advisor, he could have been nabbed on that, but he didn't. And it's a long and winding story. For another time, we can talk about it, but it's a very interesting story. I'm in the business of offering advice, not products. So in other words, we identify where the needs are and come up with strategies and solutions. But it starts with identifying needs and goes from there. Typically, we're fee-based. Some of the insurance products that I employ in my practice, it can't be fee-based. It's just not the way they're structured. Sometimes it's actually commission-based, or I should say marketing fee is the way they call it, a field marketing fee. We offer comprehensive financial planning services, not just stock market reviews and asset allocations. Somebody planning for retirement, wanting to, I get the big question now in the last 3 years I've gotten is, can I afford to retire? And do I have enough? And we do an analysis, not just based on a prospective rate of return, but a tax-adjusted and inflation-adjusted return. Are you going to be able to live 25 or 30 years that we talked about in my opening remarks? That's comprehensive financial planning. I work solely on behalf of my clients, not for a brokerage house or insurance company. People that are brokers are actually employees of that brokerage house. They are employed by them. Their first allegiance is to the sales manager that is telling them what to sell on this particular day or week. It doesn't mean that's bad. It's just that you as a consumer have to know what the nature of the relationship is. It's like a car dealership that you go in and you look at it and they got a showroom full of things and they're trying to steer you to that model over there. That's why they put it in the showroom. And is it just because that's the best model for you, or is it the best model for the dealership to sell you? What do you think? Probably for the dealership, right? So And if the yellow ones they bought right and they can make the most money on, they're going to tell their sales force, remember, sell the yellow ones this week. Because the red ones and the green ones, we're not going to make as much money. And if you sell the yellow ones, we're going to give you incentives, bonuses, enhanced commissions. And that's the way it works. It's a sales organization. So you need to know as a consumer, that's what you're dealing with. It doesn't mean that it's bad, it just means that that's what it is. So can they say that they're giving you impartial advice is what the question is. And the answer should be probably not. I mean, they may be wonderful people and very skilled, but you just have to be buyer beware. So there are differences between a registered investment advisor and a stock brokerage firm. In an investor survey, they believe that RIAs have a fiduciary responsibility to act in investors' best interest. 74% of those interviewed, this was TD Ameritrade, said they weren't even aware of what I just told you. And it's probably, was anybody here aware of what I just said? You're aware of it? Most people don't know that. And they're saying in this survey, 74%, 3/4 of the people surveyed did not know that. You know, on your statements, if you're with a brokerage firm, you'll hear things, you'll see things like, or on the website, customized advice, ongoing guidance, personal connection, enhanced quarterly reporting, fees are annual fee-based, you're billed quarterly. However, they all have to, by law, contain this little disclaimer that says accounts are brokerage accounts and not advisory accounts. So it's worth repeating that. They're brokerage accounts and not advisory accounts. Our interests may not always be the same as yours. We're paid by both you and sometimes by people who compensate us based on what we buy. Our profits and our salesperson's compensation may vary by product and over time. So that's supposed to be in the fine print of your statements. The new law is supposed to elevate that transparency to something that you don't have to look in the fine print for. And we're hoping more and more that that's what happens. Those of us that feel on the other side of the road here are very concerned that people have been confiscating the term financial advisor and using it improperly. And the SEC and the government has agreed. So which option is for you? 79% of investors say they're less likely to go to a brokerage firm for financial advice. There's another way to do this. If you have more than $50,000 to invest, you should fire your broker and find an investment advisor. Brokerage firms would like you to think they perform the same functions as an investment advisor. This is an actual quote. It was uttered by Arthur Levitt, the former chairman of the SEC.